Hello dear Forex traders, welcome to 𝗙𝗙 Market. Because of some technical problems, this time you will watch weekly market overview on Wednesday. Let's start. The previous week, the US dollar gathered momentum and outperformed its major peers for the first time after almost 2 months. The US dollar index jumped by 2% as its demand recovered, while the other major currencies lost value. The Japanese yen dipped by 1.20%, followed the British pound, the Aussie and the Canadian depreciating by 1.6%, and lastly, the Swiss franc and the euro dropped by 2.1% and 2.4% respectively. The mostly watched event of the previous week was the FOMC monetary two-day meeting conclusion on Wednesday. The Federal Reserve did not change its tone since its previous meeting, and the statement was more or less the same, despite that investors were expecting a more dovish statement. Therefore, the US dollar then was broadly higher against its major counterparties, with the US dollar and index drawing a support at 78.96 and climbing to as high as 80.755. The US dollar index is currently limited by resistance at 80.74 and stochastic oscillator is overbought. Thus, we would expect a pull down. At the same time, the biggest loser of the previous week, the euro-dollar currency pair, was contained by major resistance at 1.3825 on Monday and Tuesday, and then collapsed even though some eurozone members borrowed money on lower rates. The European currency pair breached initially the support at 1.3740 to close the week at October bottom at 1.3480. Again, we see here that some oscillators have dipped to lowermost levels. Thus, we would anticipate some short covering by traders. The Australian against the US dollar was weak during the previous week because the Reserve Bank of Australia governor said as early as on last Tuesday that Aussie is high given the economic data of productivity and terms of trade, and he was expecting the currency to fall then rise. The kangaroo currency pair took the downside, losing the support at 0.9677 and sliding to as low as 0.9433. The US dollar Japanese yen does not have any clear direction, and its trading range has been getting squeezed since June to end in the last week between 98.82 to 97.17. Moreover, the Bank of Japan held its monetary policy unchanged on the last Thursday, and its Governor Haruhiko Kuroda restated that would maintain a highly accommodative policy for as long as necessary. Thus, the yen has given back previously earned territory. The coming week, the news front suggests that we would be focused on 3 major central banks announcements. Firstly, the Reserve Bank of Australia is most likely to hold as its key rate at 2.50%. Nevertheless, the statement release could impact the currency pair trading. Then, on Thursday, Bank of England and the European Central Bank would release their monetary decision, and we expect no major change, although ECB could provide something new on long-term refinancing operations, LTRO. Lastly, on Friday, we would be extremely alerted due to October US non-farm payrolls. You are watching Weekly Market Overview by 𝗙𝗙 Market. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.